down around 0.4%. A bit of a sluggish session, you'd have to say.
Okay, all right. Let's move on then and let's get our first management on the show. RateGain Travel Technologies reported a strong set of numbers. The company saw robust growth and higher margins on the back of sustained global travel demand. Mr. Bhanu Chopra, the chairman and managing director, joins us on the show. Hi, Bhanu. Good morning. Thanks so much for joining in. Another solid showing, so good going on that aspect. The problem is, there are various reports that suggest the globe is slowing down a little bit. So I wanted to focus on your marketing technology segment. It appears it's slowing down. Are you seeing any budget cuts from your clients in this particular segment?
Yeah, hi, good morning. So first off, in terms of the macro conditions when it comes to travel, we're actually, to the contrary, seeing no slowdown. In fact, if you look at the industry reports, travel's been called the mega trend. And if you look at sort of the opening up of the travel industry, first it was all around domestic tourism. And now, given all the flights and they're coming back to full capacity, we're seeing a huge advent of international travel. In fact, what the industry reports are suggesting is it's going to be almost a 50% jump when it comes to cross-border tourism as well. So at a macro level, and even if you actually look at our recent quarter numbers, in terms of deal wins, it was the best quarter ever for us because we recorded new bookings of almost 49 crores, which was 22% over last year's quarter, similar quarter, which was the best quarter then. So, at a macro level, we actually don't see anything. And in terms of the volumes in our business also, they're increasing quite substantially.
So Bhanu, just to come in, you're seeing no budget cuts from your clients as of now, at least.
Yeah, like I said, I mean, what has happened is as a result of the, some paradigm shifts that happened as a result of the pandemic, there's an increased digitization, there were labor shortages. So we are seeing increased use of technology and digitization. So as a result of which, we are continuing to see some very, very robust demand and growth in the business.
Okay. Bhanu, in fact, this quarter you had the best new contract wins of around 49 odd crores. Do you think that that's sustainable? Are you probably going to achieve those kind of numbers in the coming quarters based on the commentary that you've given us as well?
Yeah, look, when I look at RateGain numbers and I sort of hear all the news that's around us, and there is news about doom and gloom, and when we look at our numbers, it's quite contrary to what you see. Okay. So I want to just say that, look, when you hear so many things around you, then you tend to be more sort of cautiously optimistic. But in terms of our engagement with our customers and also on the back of our recent acquisition, how things are turning out, it looks very, very promising to us. But, given the overall macro mood around recession, interest rates, etc., I would just be cautiously optimistic and hope I can come back with the same level of excitement and enthusiasm, every quarter on your channel.
Okay, all right. But do you think that you have at least some kind of visibility or optimism to share on the margins? Because you've done well there. It's been some of the highest margins that you've reported in the past couple of quarters, or at least since Q1 of FY22. You've improved all the way to 16.6%. Is this a figure we can work with going forward?
Yeah. So Ekta, when we actually came to the public markets, we were right around 9% operating margin. And what we had indicated is we would see an expansion of 200 to 300 basis points every year, getting to about 20% over a 5-year period. So as you can see, we've exceeded that guidance by a huge margin. We already at about 17%. So we feel very, very good about where we are now. And quite frankly, the company is now almost at a 800 crore run rate given the acquisition that we did. And I feel we are still very small. The opportunity that we are after is a $7 billion TAM. Yeah. And we need to invest in the company. And so we will, given that we've exceeded what we guided for, we want to now take whatever excess margin that we create from here on as the operating leverage kicks in back
Yes.
into expanding on our sales and marketing muscle. So yeah, so we net, I would say, we will continue to deliver similar kinds of margins, and anything over, we will look to reinvest.
All right, Bhanu, I've got a couple of questions for you. As you briefly said that you're going at a run rate of around 800 crores. I'm looking through an Anand Rathi report, and they're working with around 890 crores for next year in terms of revenues. And also they're working with margins of around 16%. That's including the Adara acquisition. Gettable?
Absolutely.
Okay, all right. 890 with around 16% margins. What about Adara? You all got a good deal. You bought it, I think, when the last year they did something around $27 million odd in terms of revenues. But prior, I think, to COVID, they were doing close to $100 million odd. So what's the trajectory out there? Do you see that number head back towards those levels?
Yeah, so, as you know, travel industry was hit quite hard as a result of the pandemic, and so was Adara. And given the company was never profitable, it was really hard for them to go back to that $100 million trajectory. So within, RateGain hands now, and given the strong balance sheet that we have, and we have a huge overlap of the same customers. So our low-hanging fruit is to really reactivate a lot of those relationships that they had with the large hotel customers or car rental companies, which we have as well. So, we've been pretty conservative in terms of what we've guided. We said we'll grow the business back, at 15%. And I was a bit cautious when I came on your channel last time around because we just acquired the company. We just got married, and it takes time to, figure out your partner.
It's a difficult phase.
Yeah. So the honeymoon period is actually, is looking quite good to us, and hopefully it'll continue. So I'm happy to report it's all good. There are no negative surprises. So I'm hoping as we sort of continue down the road of integration and we learn more, they'll continue to be positive. So we net again, I think we are on target to what we guided. We said we will break even this quarter, and we will guide for 15% growth and 15% EBITDA. So it looks very, very doable. Hopefully we can come back and revise it upwardly. And happy to have that conversation.
Okay,
next
Bhanu,
time.
just a quick last question. Over 400 crores of cash. You are positive on the integration of this current acquisition that you've spoken about. But anything which we can expect in terms of inorganic initiatives?
Yeah, look, I've always said this. It's we are an acquisitive company. We have a robust M&A program. It's a lot about being patient. Adara took us 2 years to consummate because you have to be patient if you want to get the right price. And I do believe, given the overall market meltdown on tech valuations in the West, there are a number of opportunities we are pursuing, but waiting for the right price. And I'm quite hopeful that we'll continue to see M&A activity, and that's very much part of our growth strategy as well. So yeah, so I'm hoping something will materialize, this as well.
All right, Bhanu, good chatting with you. I like the way you put it with regard to the initial part of marriage. The good part for RateGain is you can get married numerous times because you are in numerous M&As. For us, I guess, it's it's just one. But thanks so much for joining in. You're sounding optimistic about the future. We look forward to chatting up with you in the coming months as well.